Hello, Guido here from blockbuilders.net, and today I want to show you how futures trading or derivatives trading on OKX works. OKX is the second largest cryptocurrency exchange in the world. It has a very high trading volume and it has almost as many coins to trade as Binance, as you can see here. OKX currently has 241 different coins that you can trade with leverage on the futures exchange, and Binance has 297. So it's pretty close. If you don't have an OKX account yet, I put a link down in the description that you can use to sign up. And there are always like special promotions when you use that link that you can use once you have an account. So once you did that, you can actually almost immediately start trading. The only two things you have to do is you need to verify your identity. And that's mandatory now with all the cryptocurrency, or at least all the big ones, where you can trade futures and derivatives. So in order to do that, you just click on verification here. I'm already verified. Otherwise, you would need to upload an ID card or a passport, and then they would usually verify you in a couple of seconds because it goes mostly automatically. The next thing you need to do in order to start trading is you need to deposit some money on the exchange. However, it's pretty hard to deposit regular currencies like euros or US dollars or Australian dollars or British pounds and so on. And there's like one way where you can basically do a third-party payment. And I want to show you that with US dollars. And let's say I want to deposit 100 USD. You can see here I would usually get around 95, 96 USDT. So I would almost always pay a fee of like 4% and more. And here they claim it's just 1%. However, if you do the whole verification here, it would also end up with a 4% fees. So I can't really recommend that. So the best way to actually do it if you deposit cryptocurrencies here on the exchange. And for example, for me, how I do it is I have a Coinbase account as well. So I deposit euros. So I'm in Germany, so I have to deposit euros to Coinbase, and then I exchange them to USDT or Ethereum, and then I send them to OKX. And if I want to withdraw money, I just send USDT back to Coinbase and exchange it for euros, and then I can easily send it to my bank account from Coinbase. However, there are other exchanges that do that as well. But OKX is really not the best way to do it, to handle your euros or British pounds, because it's quite expensive. So once you have some money on the exchange, there are different wallets on the exchange. There's the funding wallet and the trading wallet. And you can easily transfer money from one wallet to the other. So let's say you have some USDT, and if you want to trade futures, you need to have it in your trading account. Then you need to transfer it to your trading account and just type in how much. And then you can just click transfer, and it will transfer it immediately, and you don't pay any fee or anything. And you obviously can transfer it back anytime. It's also instantly, and you don't pay any fees. So once you have that, you can basically start trading. So let's have a look at the futures that you can trade here. So first of all, you can see there are different derivatives that they are trading here. So first of all, the most popular ones are perpetual swaps. And so most of the coins that you have or that they trade on the exchange are also available as perpetual swaps because it's the most popular futures and variations that you can trade. Perpetual basically means the contracts will stay open forever and you only pay a funding fee. And you also have like the regular futures here, but they are not as popular as the perpetual swaps, and they have an expiration date. So the expiration date can be a couple of days out, or 3 months out, or 6 months out. And that basically means that on that date, the contract will close automatically, and your position will be closed automatically. The advantage with futures is that you don't pay the funding fee. However, perpetual swaps are way more popular than the classical futures. And let's have a look at the BTC USD or USDT futures. We can just type in BTC and then we look at them. And here basically you have the chart. One candle is 1 hour, and you can change that for like 5 minutes or 4 hours and so on. You have the order book with in red all the sell orders, in green all the buy orders, and here the last trades. And then you have something here that they call current funding rate. That basically means every 8 hours this countdown here goes to 0, and then you have to pay the funding. If the funding is positive, you actually have to pay it if you are long. And if the funding is negative, you actually receive the percentage amount here if you are long. And as I said, if you are short, it's the other way around. So if you are short, you would actually get that amount of money or the percentage here once the countdown goes to 0. And now it starts again. And as you can see, now it's another 8 hours until the next funding is collected. And yeah, you only pay the funding if you're in a position once the countdown runs to 0. If you would close your position now or open it now and close it in 3 hours, you wouldn't pay any funding. And the funding is basically there to adjust for the amount of long positions and short positions there. So if most people are long, the funding is usually positive. And if most people are short, the funding would be negative. That's basically it in terms of funding. Then you can select your leverage. So for Bitcoin, it's up to 100x. However, I wouldn't recommend using 100x leverage. That basically means if you open up a position, you can use a leverage of 100x. So if you have $1,000, you can theoretically open a position worth 100,000 US dollars. However, if the price moves just 1% against you, your whole position would be liquidated. So you would lose your 1,000 US dollars. And yeah, I wouldn't recommend using a higher leverage than 3x. However, with cryptocurrencies that are a bit more stable, like Bitcoin, you can also go up to 5x. And isolated basically means you can only lose the amount of money that is in that position. Cross basically means you can lose all the money that is in your trading account. And then you can either open up a market position. So you just select how much you want to invest, and then you just click buy, and it would automatically open up a long position, or sell, and it would automatically open up a short position for the best price or to the best price available on the market. And with the limit order, you can basically say, okay, you want to open a short position with 25% of your capital once the price drops to, let's say, 37,000, and then you just click buy long. And you can see you have an open order now in the order book that will stay there until the price drops to that level. And you can always cancel it easily. And you can do the same with the sell order. You can say, okay, you want to open a sell order, so you want to go short because you believe the price will drop. And if the price goes to, let's say, 40,000 US dollar, and then you can say, okay, sell short, and then you have a short position here that will open once the price goes to 40,000 US dollars. And you can cancel it. Once you have a position open, it basically looks like this. You have Solana USDT perpetual here. So you can see the opening price was 55.96, and the current price is here. So You can see with that position, I'm up 300 USD, so 12% from the amount invested. And if the price drops, the floating P&L goes down, and so on, and you can close it anytime, basically. And yeah, if you are negative, it turns red, and then you are like slightly negative. However, if you are green, you are positive, so I'm making money if you would close it immediately. And I have one that's a bit special. I want to show you that as well. And we also have the option to use crypto margin futures. So here I usually used USDT positions. So I have USDT in my account. However, you can also via Bitcoin, for example, to your trading wallet. And then you can use that as collateral and open up, for example, a BTC position with your Bitcoin. And then you are not getting USDT when you are up, but you would get even more Bitcoin. So you can also use crypto margin, so basically cryptocurrencies as collateral. Let's say, and you would do that if you have Bitcoin and you think the price of Bitcoin will go up. So it wouldn't really make sense for you to exchange that Bitcoin into USDT to open up a Bitcoin trade. So it would make more sense to open a crypto margin and Bitcoin trade with Bitcoin as collateral, because then the Bitcoin price goes up, and so your collateral goes up, and you even getting more Bitcoin then. So that's basically it in terms of futures trading or derivatives. There are a couple more things you can do. I will make a separate video about that. But it's basically a marketplace for trading bots. You can see different bots here, and copy trading. So you can see successful traders that you can basically copy. Yeah. And then it basically automatically copies all the trades that he's doing. And that's it in terms of futures trading. If you have any questions about it, please feel free to use the comments down below. If you find that video helpful, please hit the like button and subscribe to my channel. Thanks for watching.